Hello everybody and welcome to the Pipnotic Symposium for the 1st of May 2017. Today's the big Arbeidernes Camp Day, as they say in Danish, and probably similar in Swedish, so I think most of the people are going to either be on holiday or be doing something else, enjoying this weather. In Copenhagen today, the sun is blazing, which is really nice, just looking out at the window of my office, and it's really beautiful day. So I'm sure it is as well in Gothenburg, Johan. It's gorgeous. It's so nice to see that spring is finally arriving. Yeah, man, it's excellent. Okay, cool. Well, today we are going to have a pretty nice and informal session. Most people are not here. We have Australians that are probably off to bed, and the Americans are still waking up, and the Europeans, people are either having lunch or busy working. So what we're going to do today is walk through a couple of software things, maybe talk about the update, and also we're going to have a look at a few pairs and see if we can find something that might be interesting to trade. Okay, so first of all, the update is, and Johan, if you have any questions you want me to answer during the session, just type them in there and I'll get to those. So, the software update is pretty amazing. It's been something I've been wanting to do for a long time, and I'm really pleased that it's materialized now, and now it's something that everyone can use. And I've been watching it a lot on the smaller time frames, on the 5-minute, 15-minute, half-an-hour, and 1-hour charts, because I know a lot of people like to trade like this. And an incredible thing is just the degree of accuracy that the new version of the software is giving traders. It's unseen accuracy, especially the current version in relation to previous versions. Okay, so what we have is we have these boxes that are nested one inside the other. You can see here we have a blue box, which is a 4-hour box, and within that we have a white box here, which is an hourly box, and inside that we have a half-an-hour box. Let's make sure. It's a half-an-hour box, which is 7 pips. And these small boxes drawn around areas of supply and demand are pretty accurate, and you can normally manage to reduce risk pretty quickly, or even get the risk, out of the trade, so you're getting a free look at the trade. There was a trade I wanted to get in on last week. I think it was on Friday. Let me see. So it was the 5th. Hardly the 5th. It was let me look here. Where's my mouse? So we had the 28th. So let's have a quick look at this trade. The 28th here. So this is a trade I wanted to get in. And I missed the trade, but you can see if we have a look here, you can see that we're reacting off a daily area. So if we go to the daily chart and look why, actually it looks like it's a 4-hour area. And here it is. You see we have a extended range candle, 2 periods of accumulation, and then we have more extended ranges. And then we had this price kind of poked into this area. Let's change the color because it's not the daily, it's a 4-hour, just so we get that right. So it touched the area, and that's pretty much where we want to buy at when price came back on the following approach. If we zoom to current price, you can see that price came down to it, and we had a tiny drawdown of we better measure this piece here, of about 10 pips, and then price went north, and that was pretty nice. And I wanted to have a look at this second approach here, and you can see that we had a nice rejection. Price went up, then it poked back into the area. And so on the hourly chart, if we go to current price and have a closer look. Hey Carlos, glad you could make it today. You could see that we had this really nice pattern. Price popped down here, we had 2 accumulation candles, and then price left. And Carlos, you're not using the software, but you don't need it. I think that you've kind of trained your eye over the time that you've been using the software to see these. And so ultimately I was looking at this area to buy it. And so I had an entry just down here in these wicks, because whenever we see these wicks like this, it's, I mean, price is begging us to go into the smaller time frames. And if we zoom in a little bit, and you can see that we have these really nice candles here, I thought, great, I want to get in at the cheapest possible price. So more aggressive approach would have been there. I would have been filled if I would have put my order there, but I didn't. I was looking for the better price, which was down here, located at the 74.47, and I missed a trade by, I think, 1 pip, which is a real blow. But the cool thing about this most recent update is that it's showing these levels to us. If we let's remove this 4-hour level, you can see these areas are just nested within these greater period areas, and they just jump out at you. And so here we had, I mean, I missed the trade, but it was very close, and there was virtually no drawdown. And you're seeing these absolutely everywhere. When we have another one up here, we have the hourly chart, and then within that we have a 15-minute area of supply. So price is probably going to have a reaction at roughly this area here, the 75.43. So on the Aussie US dollar, mark off the 75.43 level and just see what price does when it gets there. Go into the half an hour, the 15-minute chart, and see what price does. It'll probably go up here, providing there isn't news and there's high liquidity. So during the North American or the European session, put the line there and see what price does when it gets there. And I think you'll find it'll probably have a bit of a bounce. You can see that we have the hourly area just here, and this is a little bit more aggressive. You can see that the entry would bring us down into the middle of these accumulation candles, but this 15-minute area we have at the top, it just makes a lot of sense to consider taking a trade there. And if you go to, let's go as far down as the 15-minute. Let's refresh that so we get all of the, there we are. So we have the same area here, and within that we have a 5-minute area. And if we, I don't even know if we can get back that far, but actually we can't go that far because we don't have enough historical data. You can see that the area looks like this. It's super clear how price accumulated for a period of time and then just cut down, and it left from this area of supply. So this is the area that we're going to likely see a reaction at when price returns, maybe today or tomorrow. And then above price, we have a lot of these nested areas as well, which is quite interesting. And you're going to see these absolutely everywhere. And if you consider this, for example, let me remove the software just for a second. If you consider this move, I mean, price left down, and when price left this area here, it was out of balance. So price was at disparity, so it was too cheap. And so price will likely, in most cases, return to parity, which is often where the accumulation candles are located. So accumulation shows us where we have fair trading. And so we have areas that look like this. So price goes up and it goes down and it goes up and down like this. This is fair trading. This is what accumulation looks like. So we have orders of, we have limit orders to buy here and here and here and so on and so forth. And so price needs to come down to those areas to fill those orders so that price can move higher. Because sometimes these orders are going to be massive, and they are going to provide the necessary order flows to move price higher. And so, and if you look at a price chart, you can see that we have some candles here and we have some candles there, and these candles are simply showing us where price has already been, so where these orders were previously located, but it's not showing you where the orders are. And so you have to pay attention to the areas on the chart where price has not been. And if you consider this little price structure here, price sold off, it accumulated and it poked back up here, you can see that when price went down here, when it left, it had not been back to here, roughly. You can see when price left, price was out of balance, and for price to move back to parity, it would have to come back here. And so we have supply up in this area, so it's natural that price, when you have moves like this and like this and like this, price moves back to these areas where price leaves quickly. And this is simply a very clear visual indication we have an imbalance in supply and demand. Here we have one. Here we have one. Here we have one. Here we have one. So here we have demand, supply, supply. Then we have them all over the place. We have another one here. We have another one here. We have another one here. This is not, that's not supply, but we have something down here. You can just see these absolutely everywhere. And so what you have to do is you have to, when price leaves, like this, when price leaves, and let's say price is here accumulating, and price is here, then you have to ask yourself, where has price not been back to? Well, price has not been back to when it's accumulating here. It's been back to a price at this level. You can see the high of this candle. So price has already been back to this level. So you don't want to sell for a price any cheaper than the high of the highest candle if you're selling. And this is because when price, if you have a bar that moves down and then price goes like that and it kind of pokes up and goes down a little bit, these are pockets of liquidity that are located all over the place, are kind of cascaded in and around key areas. And if price comes up to a level like this, then it thins out the liquidity available in this area. And so the logical thing to happen next time is for price to find additional liquidity, which is going to be further away from price. So this one is now gone. And so price is going to have to come to the next level. And this one is then gone. Then it has to go to the next level. And when that happens, then this one is gone. And so price is going to continue moving higher until it finds these fresh pools of liquidity that that are waiting to be, which are simply these limit orders waiting to be filled. And you can see that when price did this, price went down, it left here, it accumulated, and then it went down. Looking at this, I'll wait for one of you guys to answer. Where has price not been back to? Just type in an answer, and then there's no such thing as a bad answer. Just please type in anything. I want to have a talk about this because it's super important. Okay, I'll give you a clue. If we look here, you can see that typically you would think, okay, cool, so 75.16, that's where price left from. And yes, that's true, price did leave from there, but before it left from there, where did it go? Well, it went up to here. So price has been back as far as the 75.24 area. So this would be the more logical place which to sell. Excuse me, sorry about that. I hope I didn't blow anyone's ears off. But you can see that we have the beginning of supply here, the edge of it here. But this one up here is showing us very clearly where price has been back to. And you'll see this an awful lot, especially if price is moving, if we're getting higher highs and higher lows on the way to an area of supply. So, okay, when price is having lower lows and lower highs, like it was on this leg here, then price will typically react at the bottom, so these lower ends of supply. So price poked in here, goes down. We didn't manage to come back up here. We didn't manage to come back up here. But we had this one here, and price went here, and then price went above this. It actually went to the lows here, and then it went further down. We had this area of supply. Price left. It came back, and it went to the bottom of this accumulation body. Then on the next approach, it went to the highs. And then when price starts to, when you start to have market flow moving higher here, then you want to typically target the area where price has not been back to. So instead of this one here, I'd be more keen on taking this one here, keeping in mind the fact that price is still imbalanced, and for price to be rebalanced, it's going to have to move back up to the here, which is the point of origin for this move down. But you can see that price poked up here, and so, I mean, we could also consider selling up here, but then you have to be a little bit logical. You can't say, well, price poked up here and here and here and here and here, and then, because then you'll never get in a trade. You have to take the one that's closest to price, and you have to take the one that shows enormous strength on the release. Guten Tag, Volker. And so, I mean, you have this little price structure here, but you can see also that price is moving. We're having higher highs and high lows. So price is moving up into here, and so price, we have a trend that is moving up towards this area of supply. What does that mean? Well, that means that, yes, we have an area of supply here, but at the same time, we have a lot of strength moving towards that area. So you have to be a little bit careful. And so we'll just watch this. Hopefully it'll get there by the time we go down to the 5th page. We can have a look. But if we go to, just a second. Okay, so if we have a look here, you can see that we have this little area here, which was tested, roughly the bottom of it. Now price is moving higher and is looking for those, the supply, the real supply, which is likely going to be located further up. So I think we're probably going to react up here towards the top of this area. We'll have a small reaction, and then we'll continue moving up to here, which is where we have the more profound pools of liquidity, limit orders to sell. So it's just really important to notice where these areas are, and you can often see where they are simply by the way the candles look. And if we have a look at this, you can see that when price left here, price poked up, clearing the road. So for this price down here, you wouldn't want to sell for a price any cheaper than the high of this candle. Okay, providing that price hasn't gotten that far, we have here, so price comes up to the highs here. It came pretty close to the highs and then it tore through it because we're reacting on demand further to the left. But you always want to keep an eye on where price has not been when it's moving. This is super important. This is something that I found to really help refine entries. And you can see here, for example, we have this little area here. This is one I really was interested in trading, which I didn't manage to receive. And you can see that when price went higher here, when the candle left, the low of this candle is the price level that you do not want to you don't want to pay a price any more expensive than low of the extended range candle that leaves the area of accumulation. So the 74.50, 53 price came to that area roughly, and it'll often poke through these because typically you'd think, okay, well we need to have an area of demand located here, like so. Oops, I'm going to turn the indicator on. So we'd expect price to react here, and it did, but it went back to the price that's a little bit lower, which is where did it go to? It went to exactly in here. And if we go to smaller time frames, we can probably find out exactly where it went to. You can see here we have price left, it came down, accumulation, it went up, and it came down and went up again. And so this candle here is pretty much showing where the edge of the area was. And this is what I wanted. This is why I wanted to buy here instead of here. Yeah, but I didn't get it because the spread was a little wide at that moment, and I didn't manage to get in the trade. But price came pretty much back to this area where price tested on the way down because it cleared the liquidity. So the next pocket of liquidity is roughly around the low of the area, just here, and then it went higher, and this is roughly where price came back to. And you'll see this over and over and over and over again. And it's just a very, very interesting observation, I think, if you spend some time studying it. Okay, good. And so currently up here we have, you can see price left. First of all, you want to find the really clean and nice areas of supply and demand. So you want to look for the big candles. You want to look for short periods of agreement in supply and demand, which we have. And there's quite an extended period of agreement here, but this looks pretty interesting up here. We had this one down here, which is nice. We also have this one here, which has been established. And if you look in here, you can see that, I mean, just in here, we have an incredible release to the upside. So I think we're probably going to see some kind of reaction here. And this is actually a child, and the parent is over here. And so we could expect price to react somewhere in here. Let's see if we can go to the smaller time frame again and have a closer look in there. And you can see that price came down to this level right here before it went higher. And so this is probably a pretty decent area to trade, the 74.48 or 49-ish to be on the safe side, because this is where price poked into before it went up. And then we had the big release to the upside, which was here. Okay. Good. And any questions about that? I hope that was a bit clearer. I kind of jumped all over the place there. Excellent. Good, good. Okay, let's have a look at some pairs and see what's going on. Let's go to the Aussie US dollar. Oops. Let's remove this. Okay, so if we have a look here, you can see that price has reacted to this. If we go and let's go to the hourly and have a closer look. Got to see what's going on there. You can see actually that it should look like this. Why? Because this is where price touched before it left. So just what we spoke about, this is the area that we want to consider for a buy should price come back. So now we go back and we'll probably find that price came pretty close to that on the release. And that's pretty much where it came. And so now we know that we have daily demand, 4-hour demand that is driving price. Is that important? Yes, it's very important, because now we know that we have a lot of buyers on the 4-hour and the daily chart that have bought at this area. And so that tells us that prices probably continue moving higher until it reaches opposing areas of 4-hour supply, which we have just up here. You can see just here, but zoom in. You can see that this candle here, the high of this candle is here. So price has been back to that level, to that area, before it went lower. So if we have a look at that area, you can see that it's roughly the high of this one here. So we go to the 1-hour chart, just to refine it, you can see that this is where it is. So price came back to this area before it went lower. And so this price imbalance has been balanced, but this one has not. And so a decent area to sell at for this would be somewhere in here. The indicator is telling us to position ourselves anywhere between the 75.40 and the 75.55 area. And this is important because this is yet to be balanced. This is also imbalanced. So this is also a pretty nice area that we'll definitely see a reaction at, depending on the news. But I think somewhere up in here, if we do, let's go to the small time frames. And I'm starting to go a little bit more on the small time frames because I know that there are a lot of people trading shorter term. So this is also just to ensure that there's something for everybody. But if we have a look at this, you can see that we have the accumulation candle just here. You see the green candle, it didn't really go very high. So for this one, we could take the high of the accumulation candle, which is actually equal to the low of this body of the accumulation, the high of this extended range candle, which is pretty much equal to the low of the body of this accumulation candle. So you could put it like that, something like that. And you put it about 5-10 pips above, about 5 pips above. And so we'll leave that, and we'll see what happens. Maybe price will get there before we finish up today. And so this is a pretty nice area. And again, going to the smaller time frames and looking at where price has come back to. If you go down to the really small time frames, you'll find that you're not getting filled because of the really aggressive approach. But this is probably a pretty decent area. The indicator is saying that we want to go a little bit higher, but we're probably not going to get filled there. But you can see here that when price came up to here on its way down, and price has not been back there since then. So I think that's a pretty decent area for a small reaction. And you'll often find that when price comes back to these levels, it bounces almost every time, which is pretty phenomenal. Yeah, so we have that. What else do we have? We look a little bit higher. You can see that we have some even nicer areas slightly higher. We're reacting on the daily chart. So ideally, we should be buying, or we could be buying for a shorter period trades. If we have a look at the what the strength is doing. You can see that the strength is moving up pretty nicely. We are reacting here, and you can see here that we have a pretty clear area just here. So price kind of tested this area for a while, and then we managed to break above it. So here we have a horizontal trend line break, which qualifies this area here as demand. And so price will perhaps come up here, test this, or somewhere in here, this area of supply, come down here, and providing the fundamentals continue to move in the current direction, maybe move a little bit higher in order to rebalance this. And so that's what we have there. And you can see to the downside, we have quite an interesting area here. We have a parent area here, and we have a child area just here. And these are still untested. So you can see, if you see from the point that they were established, price has not been back there since, or this one here. You can see on this one here, price went up, and then let's remove this one again. You can see that price poked in to this level here. So that tells us that we want to consider a buy around the 73.30 area. If we go to the hourly chart and have a closer look, we can have a quick autopsy. You can see that we have a price moved up here. We had this little area that was kind of sideways price movement for a while, and then price went up, and it touched the area, and now it moved higher. You can see if you have a look lower, we actually have a better demand down here, and this is caused by a horizontal trend line break. You can see here, you see how it was tested here for a while, and then it finally cut through. So this is a very nice area, because if you look at this, I mean, price has already been back to here. You can see when price left, it's already been back to this area here. So this area here, this tiny area here, has been tested 2 times, almost, like once, twice. And that brings us down here, and there's no real demand in here. You can see there's nothing. There's no really nice sharp releases, but we do have that nice sharp release down here, which I like. So I probably wouldn't do anything here. If price manages to move down, I would wait till price came down here, because this whole price structure here is standing on this skinny little leg just here. So from we'll put the high there to, you could probably put it like around here. So something like that. I think that looks like a pretty decent area. And so the best thing to do is to go to the small time frames and ask yourself the question, where has price not been back to yet? And you can see it's been back to here once, twice. There's no demand here. This is just price accumulating, kind of drifting higher, like messy accumulation. I mean, price has already been back down here. And then price, you can see, already came back down here, but it hasn't been. You can see there's black space from this leg here. So this is a really decent area, and this tells us that we're probably going to get some kind of reaction here, because this is where we had price struggling to get through, and then it just popped, and it has not been back yet. There's no tests either, which is really nice. So I really like that. So I'll remove this one here, and I'd wait for price to cut, and this one, and I'd wait for price to come down here for a buy. And while it's not a good idea to try and catch a falling knife, because you never do know where these are going to stop, if you go down to the smaller time frames like we just did, the hourly chart is really nice to stop on, because the hourly charts, give or take, it's pretty much the same thing. Hours start and end at the same time for everybody, and so we are all looking at roughly the same price information, of course depending on our broker's price feed. But if you're looking at a 4-hour chart and a daily chart, you'll find that 4-hour periods start and stop different times, many different times. So it can be pretty confusing which time frame to use, or rather which GMT offset to use. I think the most common is GMT, but my broker is GMT +2, and some are GMT +3, +4, -7. You know, so if you're focusing on candle patterns, it's really good to refine the entry on the hourly chart, because this is pretty much what everyone is seeing. So we have this down here, which is great. We also have price kind of leaving here, so I think that we could certainly consider buying should price come back down here, keeping in mind that we would be buying into medium-term supply here at the top. Okay, let's have a look at another pair. If we go on the weekly chart and see what's going on. You can see that we're getting some currency strength divergence. Now you can see that we have a high. We have prices higher, but the histogram is not going higher. So that's telling us that price is probably going to slow down. So if we have a look here, you can see the green candle that moved away. Where did it poke back to before it left? Right there. You see? That's where it stopped. I have an alarm just before there. So if we go to the 4-hour chart and have a closer look, we can see that we have this here. So price left, it accumulated, and then it popped lower. So price is currently right here, but if you look higher, we have this accumulation, and if you look higher, we have a price imbalance that is still to be filled. This is price imbalance. It's been filled once, twice, so that's nice. So this one is still out of balance, and this one is currently being filled. So we'll probably see a reaction around here just below. And when that stops, we'll probably see the next reaction up here, because this is currently still untested. We go to the hourly chart. Let's see if we can get back there. It's a bit difficult with these price feeds. Okay, there we are. There it was. So you can see here that this is the 4-hour area, and you can see at the top there, price left. This one poked here. So this is a pretty nice area. This is actually probably the area that you would want to sell at the 138.03. So roughly the big figure. So you could, for this, you could. As a matter of fact, because we have accumulation just above, we would be leaving a little gap from here to here. So I would close that, and I would simply put my entry over the high, and I would put it just below this low here. So around the what is that? Just around here, so around the 138.10. I think that's a pretty decent area, and stops above the high, 5 to 10 pips, maybe 10 pips above here, yeah, or 20, something like that. And I think that's a pretty decent area because price left really quickly. And you can see that we're probably going to get some kind of reaction here, but you can see when price left down here, we didn't have any candles looking like this with no wicks to the upside. That's what you want to see when price left. But when you have these small pokes higher like that, this is clearing the road. And so, I mean, I like this one here. So the 138.09-ish, I think it's a pretty decent area to sell just up there. So we have that, it's just up here. And also, you may have noticed that we actually had a trend line break here. So from here to here, and the area of supply that caused a trend line break is this one here. So that is also another, that also qualifies this area. So we have kind of pretty messy supply here, but we had the really nice push away, and so we're going to see a reaction just in here, and prices roaring high as you can see. But oil is currently moving lower at the moment, and there's still a bit of time, or a bit of room for oil to continue to move lower, and so this will hopefully bring price up to where our entry is at this one, around the 13800 area. And then we could potentially see price move down. But when you see something like this, when price moves up like this, assuming that we wanted to sell up there, you also have to ask yourself the question, is there room for the trade? And when I say is there room for the trade, I mean are there opposing areas of, in this case, demand that will get in the way of our trade moving towards its target. So if you want to sell here, you don't want to see super sharp areas of demand being formed below your entry, because price will probably come back down there, seek the liquidity out that's available there, and then push through your area of supply and then hit the stop. That's not what you want to see. Ideally, you want to see moves like this, or pretty like inefficient trading up into an area. This is relatively inefficient, I think. up to the area before you'd sell. So if you have price kind of moving up, accumulating, these small accumulation areas are bumps in the road. And so price is going to have a tough time moving through those, or potentially. So just keep that in mind. So I would definitely put an alarm. I'll move the alarm up to here, and I'll wait and see what happens and see if price does come up there. And if it does, what the road looks like on the way down. And ideally, you can assess these bumps in the road using the 1 hour chart. You can see here that we don't really have. We have some demand. We have some demand here. There's nothing until we have this, which has been almost tested, and then besides that we have that down here. Then there's nothing here. Yeah, there's not a whole lot until kind of we get down here, or even down here. So so far it looks good. So I think if price does manage to move up into our area here, the 13800 area, then I think it'd be super opportunity to get short and hold that for a moment. Also keeping an eye on oil. Let's do that quickly. So what's going on? Yes, Johan, I certainly will. Let's have a quick look here. So we have the W. Yeah, I mean, look, just another example. I mean, look at the accuracy of these big areas here. It's phenomenal. Let's see, this is an old chart. Haven't had this loaded for a while. Let's clear it all off. Come on. No, it doesn't want to play. Let's see. Oh, my symbol doesn't want to work, but on the 1 hour chart, so you can see the oil has really been moving lower. This is not updated price because I can see that the price feed has stopped. I'm not sure what happened. My brokers stopped feeding price, but I mean, price is moving lower. I wish I could go to a different time frame. Damn. Let's have a look here. So if we have a look here, go into the 4 hour. Okay, you can see that your price is moving lower. Let's have a look. Let's go to the weekly. Don't have a lot of data. The daily, I have a bit of data. Oh, what a mess. Let's remove all these. Let's remove this. Okay, so let's remove these. Okay, this is because the price feed is just absolutely horrible. Okay, so price is moving lower. You can see that we reacted on this. And now we're coming down and we're feeding into this here. So this is a chart. We're kind of reacting on this base here. It's really ugly price feed. You see how it's all gappy and horrible. It's really not nice. But we're reacting here. We probably have divergence down here if we had some kind of an oscillator on there. So price is kind of moving lower. And you can see that. So we had, when price moved higher, you see we had that nice green candle with a small wick. So price came down to roughly this area here, and now it's moved lower, and now it's all the way down here, and now we're feeding into this little accumulation candle here. And this one here is interesting, but this one caused price to close above these highs here. But you can see that down here there's something going on, but we'll have to go to smaller time frames to find out. Oh, we have some pretty interesting demand at the bottom. If we go like this, mark it off, and then have a look to the left and see what it is that's caused that. You can see that we have a few things here. We have something down here from the low to around here, so there's demand down there. We have something else here, and we have this there. So we leave those. So okay, so price could continue down a little bit. Where do those lines go? Price could definitely continue down a little bit further. Let's go back and, oh, here they are, sorry. So price could come down to here, we have that one. Okay. Okay, so price came back down there. So we're testing that area of demand that you can see just here. So we have a pretty decent pattern here. Price really moved away, but we didn't. Okay, we have managed to break this trend line here, like something like that. And the area that did it is this one here, which has been tested, but we still have price out of balance until it gets down to around here. So if we just mark off that area there, so in the 51.16 area, when price gets back down there, we want it to overlap something here. So on the hourly chart, you do the same. You can see that when price is leaving the highs here, here it's leaving the lows, and so you want a test on this area to overlap with the test of this area. And if we go to a half an hour here, we can probably see it. You can see that we've tested this one up here. We do have a one that's slightly higher up here, a tiny one. But if we look here, you can see that we have a pretty nice area around here. But ideally, you'd want to put the stop over the highs like that. Go to the hourly and see what it looks like. Yeah, so something like that, I'd say. It's around the 136.80. But you want the test of that to overlap with the test of this down here. So we had a trend line break. Here we have not had a trend line break. Let me have a look in the 4-hour chart. We have 4-hour trend line, which is still intact. So we still have an upward trend on the 4-hour. So ideally you want price to break here. And you can see at the top there we have a really nice pattern that's currently developing, which could be the one that we want to grab onto. That's this one here. So perhaps something like that, if price does manage to close down below here, then a test of this at roughly the same time the price moves back down into here would be a pretty decent area to take a trade at. That's certainly something to consider. So we have that, which is great, which is very nice. Okay. Is there anything else you guys want to have a look at? Otherwise, I'll just walk through the pairs. A couple more pairs. A dollar index. Let's have a look at the dollar index. I've got that here. So we have the dollar index. Okay, so we have a look at the dollar index. We have, let's go up here. So price is kind of coming off these highs. You see price is currently in a daily downtrend. You've got these highs here that are being respected. The price is on the weekly chart. So we had a high, a low, a lower high, a lower low. So price is moving off that. We reacted on this, which also converged with this trend line. And then price managed to gap down. And these gaps are a little bit, they tell us that there's a lot of strength behind the move. You can see that if we do have a quick look here, you can see that we had this down here, which was tested, and now it's gone. So you have to ask yourself which area of supply did that. I mean, broke this one here. It's this one here. So we have this one up here. So we also have a gap, and gaps normally close. And so ideally, we could expect the price will close the gap and then continue lower. We have a look on the smaller time frame. You can see that we also had this here. So we had like a parent and a child. Just cap off the, oops. So we have that there. And that's closed, and the area that did it is, we have it really messy. I hate it when this happens because it really makes things look a little bit ugly. You can see price is sitting on this area of 4-hour demand, and it's kind of just going sideways for the time being. If we have a look, you can see that we have price moved lower. So price is just ranging for the time being. We have a trend line on the hourly chart, looks like that, which may be breached soon if this closes below. But ideally, knowing that we're in 4-hour demand, we'd like price to come back here and react on that and then move up here so it closes the gap. That's what we want to see. We want that gap to close. But for the time being, things are looking pretty down on the dollar. That in mind, we can look at the euro US dollar, or the Aussie US dollar. I like that one. So yeah, down on the dollar, up on the other crosses with the dollar. But if you have a look here, you can see that we have some pretty nice areas here. We have this one here. Yep, just here. We have we look inside that. You see that we have this whole move originated from here. So if you take the accumulation or the high of the candle to the left, and you kind of put like 10 or so pips above, we have something like that. That's at the remove that label so you can see. Okay, so we have the 75.21, looks pretty interesting for maybe a reaction, but we should be buying this because the dollar is moving lower until we see something else happening on the dollar. We do have a couple areas down here. We have this area here. What did this do? Yeah, when price left here, we managed to move out this little pattern here. So we have some demand in here, like that, just around there, the 7,500 area, which is still untested. Go to the tiny time frames. You can see that it hasn't been tested yet. So price has only been back to here so far. You ask yourself, where has price not been? It has not been back here. So we'll probably get a reaction there. That's a pretty nice. It's also the round number, which I really like. And so positioning yourself along that. Come on, trend line. Around this area would be pretty interesting. So we have that down there. We also have some areas down here. I like this one here because it's a little bit clearer how we had nice release here. Then price accumulated, then it popped up, tested the accumulation before this green candle, and then it moved higher. So we have also this area down here and this one down here, which I like as well. But I think we could probably get a counter trend short here, which might be interesting to have a closer look at. We have a look at the euro US dollar. Okay, trying to get some price down. Okay, this is gapped up very strongly, so opposite to the dollar index. And here we have a very clear upward sloping trend line, like this on the weekly. So weekly uptrend. And we have this here, which is a really nice continuation pattern. Around here, this is what I have an alarm close. I'd like price to come down here. If we zoom into that a little bit, you could see that we have a really nice one just in here at the bottom. Yep, so I'm going to remove this one here, but I'm going to mark off the area, 0730, just so I can see where the edge of the daily area is, like that. We have the 0700 area, so the big figure. That's a pretty decent area. Yeah, I like this, and I like the way the price accumulated, and then it went high, and then it gapped up, and it all left from this area here. And this is apparent. I mean, there's nothing over here. You can see the price moved back to this level here, which it tested. There's probably something in here on a small time frame. Let's have a look. Yeah, there it is. Here we have the demand that caused that. Put it down there. Back up here, you can see that that's where, see, this is where price tested the upside. So we could go for the lows here again, the 0680-ish area, because that's where it all originated from. And you can see this candle tested, shows us where the edge of the area is. It was tested once before. Yeah, and below that, of course, we have just down here. But this is still out of balance. This little tiny area of demand has been rebalanced, but this is still out of balance. This gap will probably close, and so anywhere from the 0700 area to down here, I think we could certainly see some kind of reaction there. But yeah, we also have this one up here for a shorter period here. But you see, price has already been back multiple times, once, twice, 3 times, 4 times. So this is not interesting. Also, we have this gap here, as mentioned, and these generally like to close. So just keep that in mind. Cool. Right. Anything else? We're also getting close to 1 hour. A quick. I'll have a look at that. You had a quick question. The last presentation I did last week about like the psychology and stuff. Is that interesting material, or do you think it's is it boring, or is it good stuff? You thought it was interesting. Excellent. I'm pleased. Good. It's super important, the psychological stuff, and so it's definitely something that we put a fair deal of weight on. So it's for sure something I'd like to cover more in the future. Okay, let's have a look at the Aussie, sorry, the Euro Aussie. Let's clear this up. Okay, what's going on here? Right, well, we are reacting at this daily supply, which is inside this daily supply, and we're gapping up. So let's have a look here. Well, we have a probably smaller period upward sloping trend line. So we have from here, we're going to take from the major swing from here to here. So we have an uptrend on the daily. Go to the 4-hour chart and have a look. You can see that we have this area here, which is really interesting as well. You see how price is really cut away from around here. So there's probably some micro demand in here. We'll have a look at that. We'll just use one trend line, so we don't have to look for it. Let's have a look in there. This is probably a smaller period. Okay, so this is just a mere reaction to this resistance becomes support. So price has been back there. And since then, okay, we have this one down here, which is still out of balance and untested. So we'll probably see a reaction here, like for a very short-term trade at the 44.90 area. Price is getting pretty close. And then beyond that, we have this cutaway from here. You see how this price imbalance is still imbalanced. So maybe something down here, like for a small reaction. And the gap will close once it gets down here. So what do we have there? You can see that we have some 4-hour, hour, and half an hour, 50-minute nested areas there at the bottom, but we don't really have a huge push away, but we do have, I guess, a very like a micro continuation pattern like the green rally, accumulation rally. Go and have a look on the small time frame, it becomes a little bit clearer. But it's not like a super pretty area. I would certainly wait for price to come back to one of the major areas, and you can see down here we have a pretty interesting cutaway just down here, which is also the base of this trend line, which could overlap if it happens pretty soon. To the upside, we have this nice area just up here, and you know that we're reacting on daily supply. Ooh, we almost reached the 4-hour, but we didn't manage to do anything to get quite that close, and so we could get some shorts in at logical areas of supply, and you can see that we have that nice reaction area at the top. So anywhere from here to here with a stop around here. I like that, and it's still yet to be tested, 46.14. So I think it looks pretty good, still untested, and you can see we have a lot of like nested areas within that. So I think down here would be pretty cool. If we manage to cut through this, then that would really clear the road substantially for us. So I think that if we could move through this, clear the road, kind of clear out the bumps in the road, come back up here, have a test, then there's free sailing until we get to kind of here-ish, would provide a little bit of support for price. But I think, this gap will probably close depending on what's going on fundamentally. But yeah, that's what I think is going on there. Cool. And how are we doing? What time is it? It's 1 o'clock, so we pushed 1 hour. Good. Carlos, you're writing interesting. Hey, my pleasure. Excellent. Hey, mean, not having the software, Carlos, is it interesting if I look at the pairs without the software, or should I leave it on there, or don't you mind? Are you completely happy with whatever? Okay, excellent. Because I don't want this to feel like it's kind of advertising for my software. I want it to be, because we do, for the other members, we do have a softwareless memberships where we just have the symposiums, and we have some people subscribing to that as well. Okay, cool. I'll keep that in mind. It's good. Yeah. So anyway, I think I'll wrap it up for now. But if you guys have any questions, or any of the listeners and watchers have something they want to have a look at in coming webinars, please let me know, and I'll be pleased to touch on them next week. But in the meantime, if you have any questions, send them in, and I wish you all a beautiful spring. As I mentioned, Copenhagen is really lighting up. I'm sitting here with just squinting my eyes because there's so much sun coming through the window. It's absolutely lovely. Hey, you too, and happy 1st of May to you too. And thanks, Carlos and Volker and everybody else. But I wish you all a super duper week, and we will be in touch next week. Thanks again so much for watching.